All right, let's just jump right in. If you're buying a home or your mortgage is coming up for renewal, you are facing the big question right now. Do you lock into a fixed rate or do you take a chance on a variable one? It's a massive decision, so we're going to break it all down with a super clear guide for 2025. And listen, if you're feeling a bit stressed about all this, you are definitely not alone. The last few years have been an absolute roller coaster for interest rates, and it's totally understandable to feel the pressure. So, what we're going to do here is cut through all that noise and give you a solid framework for your next move. Okay, so first things first, let's make sure we're all on the same page. What are we actually talking about when we say fixed versus variable? The difference seems simple, right? But trust me, the implications are huge. A fixed rate mortgage is your stability option. Your interest rate is locked in for the whole term. Could be 3 years, 5 years, whatever you choose. That means your payment is the same every single month. No surprises, no drama. It's why so many people call it the sleep well at night mortgage. Now, on the flip side, you've got the variable rate mortgage. This one is all about flexibility and, maybe saving some money. The rate you pay is tied to your lender's prime rate, and that thing can move. It goes up, it goes down. So yeah, there's risk, but there's also the chance you could pay a whole lot less if rates drop. So let's put these two side by side and really see what's what. You can see it right there. Payments are predictable versus changeable. The risk is low versus high. But here's a really important one that people often miss. Just look at that lost row, the break penalty. If you have to break your mortgage early, maybe you sell your house, the penalty is almost always way lower with a variable rate. That is a huge detail to keep in mind. So you might be wondering, what's everyone else doing? Well, it looks like most Canadians are playing it safe. A big chunk, 62%, are going for that fixed rate certainty. But look at that. A full quarter of people are still rolling the dice on variable. They're making a bet on where things are headed. And you know what? That's the perfect segue. Because making a smart choice here isn't just about the basics. You absolutely have to look at what's happening right now and what the experts think is coming down the pipeline. And this timeline, wow, it really shows you why this whole decision feels so heavy right now. I mean, think about it. Just a few years ago, in 2021, rates were at rock bottom. Then came the storm, 10 rate hikes from the Bank of Canada. People with variable rates got hammered. But now, the entire conversation has flipped. Everyone's talking about a cool down. And here's a hard number for you, just to anchor us. As of late 2025, the Bank of Canada's big, important policy rate is sitting at 2.25%. And why does that matter? Because that's the number that basically steers the ship for the whole economy. And it directly impacts those variable rate mortgages. So what's the big takeaway from all this? Well, pretty much all the experts are saying the same thing. They expect more rate cuts are on the way. And if they're right, well, that means variable rates are probably going to be the cheaper option for the next little while. This brings up a really good question, right? We talk about interest rates like it's all one thing, but it's not. Fixed rates and variable rates are actually driven by totally different things. And honestly, getting this is a total game changer. So here's the deal. Fixed rates, they're all tied up in the bond market. They basically follow the mood of the bigger economy. But variable rates are much simpler. They're tied directly to your lender's prime rate, which pretty much does whatever the Bank of Canada tells it to do. It's like they're running on two completely different engines. All right, so we've covered the what and the why. Now let's get to the most important part of all of this. You. How do you take everything we've talked about and actually make a decision that works for your life? And I think this quote from mortgage expert David Larocque just nails it. Are you more likely to lose sleep at night worrying that rates are going to go up or worrying that you're paying too much interest? Because at the end of the day, this isn't just about the numbers on a spreadsheet. It's about how you feel. It's about your gut. Your answer to that one question tells you almost everything you need to know. So a fixed rate might be your answer if you just need to know exactly what you're paying. If your budget doesn't have a lot of wiggle room, or if you're a first-time buyer and things are already tight, or honestly, if you just want that good night's sleep we talked about. Locking in gives you that security. Period. But a variable rate could be perfect for you if you've got a bit of a financial buffer and a little change in your payment isn't going to break the bank. If you're on board with the experts who think rates are headed down, or hey, if you think you might sell your place soon and want to avoid those massive penalties, then variable could be a really smart strategic move. Okay, we've gone through a lot. So what is the one single thing you should walk away with? How do we boil all of this down into one core idea?
It really is this simple. It's a choice between the predictability you pay for versus the potential savings you risk for. Think about it. With a fixed rate, you're basically buying insurance against rate hikes. With a variable rate, you're taking a risk for the chance to save some cash down the road. One isn't better than the other, they're just different plays.
And that really leads us to the final, most important point. The question isn't which mortgage is best. That's the wrong question. There is no magic one-size-fits-all answer. The only question that really matters is which mortgage is best for you, which one fits your budget, your future plans, and, yeah, your ability to sleep at night. That's the one you should choose.